vibrant India, vibrant banking. What does it essentially mean? The topic essentially means that there should be some coincidence or consonance between the interest of the nation and the agenda or the policy vision for the banking sector. So that is precisely I mean by the topic vibrant banking for a vibrant India. So this brings to the fundamental question: is are the interest of the banking industry in consonance with the interest of the nation today or not? To understand this question or to unravel this question, we need to get into the history of the India's banking industry. Well, the banking sector in India, if somebody writes the history of the banking sector in India, perhaps it has to be divided into distinct phases. The phase one is between 1947 to 1969, what we popularly call as a pre-nationalization phase, where public sector was largely or mostly or almost in the private sector. The expansion was very muted. There's a very little expansion in the banking business in India, banking industry in India. Banking remained as an elite activity, catering to a small microscopic section of Indian society, especially the industrialists. So the agricultural sector, which was the backbone of the nation's economy, especially at the dawn of independence, at a time when 50% of the national income was contributed by this sector, it received a pittance in the form of the bank credit. So this was the period of 1969, and this phase was also characterized by very fragile banking industry. The protection for the savings of the people was very limited. There was a banking failure, bank failures was a routine happening. So this was the first phase. And the second phase begins with the nationalization of the banks. Starting from late 60s to 1991, when the liberalization was systematically introduced with all its range and depth. So the sweeping economic liberalization has also transcended the banking sector, and we have witnessed so-called financial sector reforms or the banking sector reforms. This continued, so this phase between late 60s and 1991 was a period of massive expansion in the banking sector. The nationalized banks penetrated into the hinterland of India. There was a concept of priority lending, agriculture, small businesses, small and medium enterprises, small borrowers have received the highest priority. The class banking was replaced by mass banking. Notwithstanding the low level of revenues coming from the either to unprofitable areas, yet the banking sector expanded because of cause the nation was calling the banking sector. Banking was responding to the India's challenges of development. So we are in the process of decolonization, and the banking nationalized banks played a significant role in transforming the political independence into economic independence, as the first Prime Minister Jawaharlal Nehru put it. So the phase from 91, ever since this economic liberalization or economic reforms, you may call it by any name, structural adjustment, macroeconomic stabilization, there are very nice names associated with these policy changes. So we have to look beyond the beautiful phrases that describe these policies, essentially mean a free market euphoria, a free market mania. So this was the time and the period between 1991 and 2021. It is a process of denationalization. A process of denationalization has begun in 91 and it continues with vengeance even today. So when I characterize the history of India's banking sector history into these three phases. So each phase was characteristic of its dimensions, which need not be explained yet again. So let me straight away get into the current phase of this. Why this process of denationalization has begun after a vibrant phase of nationalization? Why the precarious experience of first phase, pre-nationalization, was simply buried and brushed aside in the euphoria for banking sector privatization and liberalization? Well, what kind of arguments are evinced? What kind of arguments are put forth to defend these retrograde economic policies? Well, the first argument was the economic liberalization believes in market fundamentalism, where we have different forms of fundamentalism, religious fundamentalism. We have different forms of fundamentalism, but the market fundamentalism pervades all forms of fundamentalism. The market fundamentalists believe in these free market economics. The paraphrase in the famous statement of Adam Smith, who said, "None should interfere in the affairs of the economy, and especially the state should not interfere in the affairs of the economy." So this phase, the market fundamentalism, precisely relied upon a thesis, of popularized thesis, that public sector is inefficient, public sector is a drag on the economy, public sector is a white elephant, public sector lacks innovation, work culture in the public sector is abominable. So the public sector is the root cause of all the ills of the economy. Well, this logic is extended to the banking sector also. But is it true? I do agree there are serious problems with the work culture. And even the customers have very serious complaints. Whenever I address the platforms, trade union platforms, even during the bank strikes, I always emphasize the fact that the massive pace of privatization cannot be halted, leave alone reversed, without substantially improving the work culture in the public sector. For a common man in the street, it hardly matters whether a particular sector is in the public or private. There's a famous statement, the cat may be black or white, it should catch the mice. So ultimately for a customer, the customer satisfaction is more important. An average customer, an ordinary customer, is unaware of the national economy goals and the role the public sector banking plays in this task of nation building. For him or her who comes to the bank, a transactional experience matters more than anything else. So the trade unions in the banking sector need to focus upon improving the customer experience in the banking sector. We should not only compete with the private sector, but perhaps would be a better performer in this regard. I do agree, I do confess, there are several structural constraints in this regard. The massive recruitment crunch and the staff scarcity, increased per capita business activity. There are a lot of things there is no correlation between rapid rise in the banking business and the number of people who man the banking sector. But all these are immaterial to the common customer. It's also true that the public sector banks cater to the common man, whereas the private sector banks cater to a few elite customers. I do also confess this remarkable difference in the nature of clientele both the public and the private banks cater to. But all this hardly matters for an ordinary customer, for an average customer like me who enters a bank. So therefore, the work culture is a serious challenge. But more than that, but should we measure the efficiency based on only one dimension? So we have very bad experience and absolute lack of accountability in the private financial institutions. We have seen how the customers of the private banks were humiliated when they're not even allowed to draw their own money. When these private banks collapsed, at least such nightmarious experience was never the experience of the common of a customer of a public sector bank. Well, notwithstanding this debate over work culture, let us dispassionately and with all impartiality measure the level of efficiency from a standard yardstick. Until today, how many private banks have simply disappeared, have simply collapsed? From the new generation bank of Global Trust Bank, which are touted as the modern era banking institution, to the more recent S Bank, what did we experience? Most often, the private banks, when they collapse, when they simply disappear, in not exactly in physical sense, but in the business sense, these private sector banks are merged with the public sector banks. I still don't understand why should an efficient private sector bank be merged with an inefficient public sector bank. So the governments perceive the public sector bank as very efficient when it has to absorb all the dirt and filth created by the private banks. So that is the level of efficiency. Have we seen any public sector bank collapse and a private bank has revived it? So this is the first question with the efficiency. So therefore, the vibrant India needs a vibrant banking sector, that too in a public sector, to really have a vibrancy in the banking system. So this is the first thing. Then the second question is profitability. Well, often public sector banks are labeled as loss-making, as a burden on the national exchequer. But contrary to this argument, the fact remains that public sector banks are running in operational profits. Before I explain, for the benefit of those who may not be well versed with the banking sector at least. So the operational, let me first talk about this profitability. How do you judge the profitability? So there should be a proper measurement of profitability. A public sector bank deals with Jan Dhan accounts where operations hardly take place, or unless there is a demonetization, nothing is credited in the bank. Only when black money holders use the Jan Dhan banks to credit their illicit income to evade income tax. So the ordinary small borrowers, the street vendors, the small borrowers are being served by the banking industry today. Let's go back to the finance minister budget speeches. Quite often, finance minister announces several welfare schemes during the budget speeches. I have never seen a finance minister stating, we have introduced this scheme for the benefit of the street vendors who will get the support of the institutional credit. And this scheme will be implemented by ICICI Bank. This scheme will be implemented by Citibank. This scheme will be implemented by Standard Chartered Bank. This scheme will be implemented by the HDFC Bank. We always hear finance minister so proudly stating that this welfare scheme will be implemented by the public sector financial institutions. So what do we mean? The social agenda of the government is carried out by the banking sector, for which the government doesn't pay anything. So when somebody tutors, trains the brilliant student, and somebody who trains an ordinary student, can the productivity be judged on the same yardstick? Public sector banks today serve the working class of the country, the small borrowers, small traders, small industry, agriculture sector, and a host of sectors that constitute the real India. On the contrary, the private sector banks serve a microscopic elite section of Indian society. So when the nature of the clientele differs so drastically, how can there be a uniform yardstick to measure either productivity or profitability? Let private sector banks also compete with the public sector banks on a level playing field. But we never see this. So this demystifies the concept of profitability. Then the third question comes is, what do you mean by these operational losses? And why are these losses? The losses are not due to the business transaction of the current day. The losses are essentially due to provisioning towards non-performing assets. And I always very curious about this phrase, non-performing assets. There is an Americanization of English, and language is used to serve a political project. Language is used to serve an ideological agenda. What is that ideological agenda? Let me give you a couple of examples. Subsidy, incentive. Both the words mean are almost the same. It is a payout from the government's exchequer. But if it is for poor people, it's called subsidy. If it is for the industrialist, we call it incentive. And our meaning, our understanding, our perception of these two words radically differ. Subsidies are considered as a drag on the economy. Incentives are considered as a fillip to the economy. That is how the language serves the political project. Then I'll give you a second example. If a person who has taken a loan could not pay the loan and the bank decides to reschedule it, we call it, or if government decides to waive it, we call it, if the government waives it, for a farmer, we call it a loan waiver. We get a very bad opinion of that. Why should loans be waived? But if it is done to the industrialist or big corporate, we use the beautiful word written off. Well, government finance minister may technically argue that written off is different from waiver. I do agree, there is a technical difference. But how many loans which are written off could be retrieved should the Prime Minister tell the nation? To quote the popular phrase of Arnab Goswami, the nation wants to know. Unfortunately, Arnab Goswami never wants to know such things. So he wants to be completely unaware of such things. But we, as the citizens of India, the nation wants to know how many of these loans written off have actually been retrieved. So, what does it mean? In real sense, written off is almost like a waiver, but still written off has a beautiful connotation. Then, if a loan is rescheduled, the repayment timetable is changed, altered. For a common man or a poor farmer, we call it loan rescheduling. For a rich industrialist corporate, we call it corporate debt restructuring. See the word, wonderful phrase, CDR, corporate debt restructure. If somebody could not pay the loan and that loan becomes bad loan, we call it a bad loan. We call it a loan default. But if a rich man, a corporate entity defaults, we don't call it default. We call it non-performing asset. I still wonder why, how can it be an asset? Can an asset be non-performing? How can an asset be non-performing? An asset is an asset only when it performs. A house is an asset. Only it's an asset when I can use that house. An abandoned house, can it be an asset? So I can't really understand. It is like an expiry medicine. So how can expiry medicine be an asset? So, but still it is called non-performing asset. Well, that is the culture of language and how language is used as a political project. So non-performing assets are essentially the reason for operational losses of the public sector. Then who are responsible for this non-performing assets? Are ordinary bank men and women are responsible for the non-performing assets. And who are these non-performing asset creators? The big business houses, the big corporates who dine and wine with the top political leaders, who share the dioceses and dinners with the with the ruling leaders of the country. These are the people who are actually responsible. And many of those who have a record of non-performing assets, who have significantly contributed to the NPS of the banks, are today honorable members of parliament, honorable members of legislature, and even the council of ministers. I dare the Prime Minister of India, can you enact a law barring someone who owes a loan of repayment of 100 crore to any bank from contesting in the elections? Why can't the Parliament of India legislate to ban those who have to repay a loan worth 100 crores from contesting any elections in India? Surprisingly, the ruling party doesn't do that, and opposition doesn't even demand it. So then, non-performing asset is not a result of the fiscal mismanagement of banks alone. Of course, there is a fiscal mismanagement with which ordinary bank employees have no role to play, when I have no ability to control. It is a fiscal mismanagement at the top level of the managerial cadre and in nexus with the people in power. But it is precisely the problem of political management and an utter and absolute lack of an abysmal political will to really tackle this problem. And we cannot have a vibrant banking sector without altering or reversing such retrograde policies. That is precisely the connect between vibrant banking sector, which requires vibrant financial sector policies also. Then why is privatization defended? After all, this government says the banks have to maintain capital adequacy. So we have to provide capital, infuse capital. But how much capital are you infusing? Do we really require privatization for that? Well, these questions have no convincing replies from the people in power. So therefore, today, these so-called liberal policies, they are in reality illiberal policies, have contributed to the fragility in the banking sector. We have seen the kind of scams in the private banks too. We have seen the coachers eating into the banking vitals of the banking sector. We have seen Nirav Modi and Vijay Mallya milking the public sector banks. I'm really surprised recently, Government of India so brazenly argued before the Supreme Court, much to the disenchantment of the top court, that it can't pay compensation to the families who lost their dear ones due to COVID-19. The Section 12(3) of the National Disaster Management Act, it makes it mandatory for the national authority to recommend guidelines for a minimum standards of relief, which shall include even ex gratia. The wording of the law very clearly uses shall. In a preposterous manner, the government argued before the apex court that the reading of shall is not correct. It should be read as may. But behind this semantics, there is politics. How much it really cost? Ministry of Home Affairs, in a circular in 2015, fixed the compensation at 4 lakhs. According to the Voltometer, till yesterday night, the total number of deaths in India due to COVID-19 were 3,99,495. So around 4 lakhs. Assuming that this 4 lakh compensation is paid, how much it actually amounts to? Around 16,000 crores, which is less than what has been swindled by two people, Nirav Modi and Vijay Mallya. Both of them are swindled to the tune of 22,000 crores. The government of India this country, India, the great nation India, doesn't have money to support those who deserve the most, those who are in a very desperate condition, and the bread earner is lost. But still we can afford to, we can still afford to have Nirav Modi's, Vijay Mallya's, Mehul Choski's, and this continues unabashedly over a period of time. Well, I have read recently a statement by the Enforcement Directorate that 40% of the money which these people owe to the banks have been transferred to the banking sector. We need to unravel it. But Nirav Modi and Vijay Mallya are not the only people who have milked the public sector banks. There are many more big corporates who have done it. So when India's banking experience is so clear, where the nexus between top management of the banks, politicians, and the big corporates are seriously impairing the banking business of India. What are we doing as a solution? As a solution, we are telling Nirav Modi, we are telling Vijay Mallya, we are telling Anil Ambani, we are telling Gautam Adani, well, you are taking money from the banks, you are not repaying, yet we are after you. Unfortunately, you are subjected to headache. So instead, we will allow you to open your own banks so that you don't need to run after Punjab National Bank. You don't need to run after the State Bank of India for loans. You can mobilize money for the people and simply fly away. And that is how today industrial houses are being allowed to have their own banking sector. World over, there is a fear that this will lead to connected lending. After all, what is banking business? It's a very simple financial intermediation for the benefit of not this audience, but if somebody watches this program who are not actually involved with the banking business. So it is a very simple transaction. You take the deposit from people and you give the loans to those who want it. And the balance, the difference between the interest rates is the profit of the banks and operational expenses of the banks. Well, this clearly means, but the private entities, by investing a very little amount, can lay their hand on massive pool of people's savings. By simply investing few hundred crores in the banking infrastructure, the private players, the industrialists, can have access to billions and billions of rupees of Indian people. And can we accept this? Can we really build a vibrant India with such a policy dispensation? Can we create a stable banking sector? I'll just recollect what Manmohan Singh, the prophet of economic liberalization in India, said addressing the G20 summit post 2008 global financial crisis. Manmohan Singh said, India's bank in India has been resilient, survived the global shock precisely because we have three things: domestic savings, domestic investment, and domestic market. And it was possible because of very strong and vibrant public sector banks. So the domestic savings have to be harnessed for a domestic investment for a nation building. If it is allowed, if the private players, if the big corporates, top industrialists are allowed to harness India's household savings, they will be diverted to speculative activity. They will not be diverted, they will not be channelized for agricultural growth. They will not be channelized to the rural India. They will not be channelized to the micro, small and medium enterprises. They will not be channelized to self-employed youth. They will not be channelized to serve the needs of the small borrowers, like street vendors, like roadside traders. Obviously, the domestic savings will be harnessed to serve the speculative interest of few players in the market, or they will be serving the activities of the big business houses. Well, this is precisely the reason today industrial houses are being allowed to own banks. We are already witnessing a nexus between big corporates and public sector banks. I can only remember two immediate examples. State Bank of India joins hands with Reliance to create a payment bank, and immediately the payment banking is taken away by the Reserve Bank from the Reserve Bank of India purview and handed over to the payment regulator. So all this do not happen accidentally. Somebody who was at the helm of State Bank of India, post-retirement joined the Reliance Group. And if we connect the dots between these two developments, it's not difficult to comprehend what's happening in the public sector banking itself. So if this is the story of corporate penetration into the public sector banking, if this is the story of corporate takeover of the public sector banking, we can easily understand what will happen if the doors of privatization are so open and so widely open. And even the capitalist countries like United States and South Korea after the Asian economic crisis makes it very difficult for the industrial houses to own banks. But today, this policy regime is antithesis to the vibrant banking sector growth in India. We are witnessing one of the very serious economic deceleration. Indian economy has grown by minus 7.3%. No self-respecting nation, no freedom-loving nation can depend on the foreign investment for a significant financing of national economy, because we know what kind of capital this is. The butterfly capital, the footloose capital cannot determine India's economic destiny. So we need a strong domestic economy. And this is only possible when public sector banking in India mobilizes the savings of the people for the development of the people. So the mobilizing savings of the people for the development of the people serve the interest between those who save and those who take a loan. It serves the interest of the both because public sector banking provides a reasonable protection to the savings of ordinary Indians. Quite unfortunately, even this confidence in public sector banks is being attacked by the policies like FRDA bill and its latest avatar. So there is an attempt to hit at the people's confidence in the public sector banking. Perhaps this is aimed at not strengthening the public sector bank. Not perhaps, it is certainly aimed at not strengthening the public sector banks, but making public sector banking institutions equally fragile so that the private sector banks will not have a disadvantage to operate. So to serve and further the interest of the private sector banks, the stability of the public sector bank is undermined. And therefore, to conclude, a vibrant India needs a vibrant banking. And that vibrant banking should be predominantly in public sector to serve the interest of the Indian masses. A developing nation like India, where still fighting poverty, fighting deprivation, fighting underdevelopment, fighting unemployment still remains a significant public policy priorities. The imperatives of the public sector banking need not necessarily be reiterated.